And that's a lowdown of how global is. Let's go across. We have Santosh Rao, Head of Research and Partner at Manhattan Venture Partners, joining us live today morning. And good morning, Santosh, or good evening from where you're at. Talk to us about first top down. How are you viewing two moving pieces? And that's likely to play out over the next 10 days. One is the Fed rate decision, and second is how global markets are responding to that, as well as the AI trade, if at all. If at all, that is the reason for the move. Give us a sense on both of those.
Yeah, on the Fed, it's an easy call. I think it's pretty much given that it's going to be one cut. That's pretty much agreed. If you hear all the governors speak lately, and even the way the market is moving, the data is coming. So I think one is good. Uh, there was a talk. I mean, at one point it was 90%, then it moved down to 30% because of the weakness or the softness in the labor market. But now again, now the consensus is that it's going to be 80%. So okay, so we're going to get that one cut. I think the key is going to be his commentary on how he sees the future. He sees already he said that he's cautious about any more cuts. Don't expect that to just automatically flow in. So that's, I think the market has brought that, and that's agreed upon. But a cut is going to be helpful. The market is expecting that anything else would be not good, or will not be received very well. And then it's going to go into, it's going to be beneficial to the market and the rest of the world. Any rate cut here always helps the dollar, or always helps the emerging markets, the other countries. So I think net net, it's going to be positive, a cut. And the hope is that if the trend continues in terms of labor market weakness, that there will be another cut at least before the next Fed chair comes in. So let's wait and see. At that point, that's where it is. On the AI trade, yes, it's right now, it's on a holding pattern. There is a lot of cross current. Is it a bubble? Are we going to see the benefits of it? So all that thing is playing into it. But I think overall, I think it's taking some time. But at the end of the day, nvidia is still the leader, and it's going to do well.
But Santosh, the question on everyone's mind, and morning firstly and evening to you, your time, is where is this entire flow of money, the liquidation from the crypto assets that one is seeing? Where is it going to find its way? Is it going to be back into equities? Is it going to be gold, dollar?
Yeah, I think that's a good question, and everyone's still grappling with that. We don't know why the crypto is going through what it's going through, but there's definitely going through some kind of a correction. Some say it's going to go down at least to 60,000. So I think that's a steep cut rather. But I think money will flow in towards the year. We always have the seasonal rally going towards the end of the year. So, and I think the setup is good for next year. We're going to have tax cuts play in there, some pro-growth policies of Trump, regulatory changes, and some rate cuts. So I think there's enough push behind this, and the tariff talk is kind of softening now. So I think people have some visibility as to where the dust is going to settle. So I think you're going to start seeing the companies begin to rehire and start reinvesting. The CapEx is going to pick up. So yes, 2026 is expected to be good for equities. I think that's where it will flow at this point. So I think that's the consensus at this point. We don't know how much deeper this crypto sell-off is going to continue and the money coming out of there, but definitely it is going to flow into equities.
Santosh, we saw $4 to $5 billion of liquidation in crypto ETFs in the month of November, and now we are also having chatter of Bank of Japan looking for a rate hike. Will that lead to further liquidation there?
Yes, I think that's we're seeing that the carry trade is getting totally dismantled there. So I think you're going to see that money is it. Yes, there's a lot of cross currents, so to speak. So liquidity is going to be there. I think it's going to find some way into. You saw the 60-40 bond portfolios are doing very well. I saw one ETF that tracks that. So I think money is going to flow into bonds and some safe haven places. You're going to see gold again pick up. So if there is risk on, I think risk off rather more and more. It's going to go towards the safe haven stocks. So you're going to see that quite a bit of that going into those places. So we'll see where it flows exactly, but definitely there is going to be liquidity, but there is a place because the U.S. equity market is expected to be good in 2026 based on the macro setup that is expected in 2026.
Okay. Great to have you then on the show, Santosh. Thanks as always for your time.